Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And in order to deliver on this objective, we have structured this podcast to begin with an overview of the global markets so as to give you a big picture perspective of the global economy. This is then followed by the Kenyan segment where we review the performance of the domestic markets with a view to covering all the major asset classes. And finally, we wrap up the podcast by addressing the topical issue for that week so as to bring you up to speed with the latest financial headlines. Ladies and gentlemen, this here is episode number 117. And in this episode, we are reviewing the performance of the global markets during the 29th week of 2024. And that is from Monday the 15th to Friday the 19th of July. And without further ado, this is your host, Jamuhuri. And together, let's dive right in. We kick it off by looking at the latest World Economic Outlook report, which was published by the International Monetary Fund on Tuesday, the 16th of July. The report showed that global growth for 2024 is projected at 3.2% and remains in line with the previous forecast. However, services inflation remains elevated and is holding back progress towards disinflation, which in turn is delaying the normalization of monetary policy. This upside risk to inflation is raising the prospect that interest rates will remain higher for longer and is likely to increase policy uncertainty and weigh down on economic growth. The IMF therefore suggests that the mix of monetary and fiscal policy should be sequenced carefully in order to achieve price stability. And breaking news this weekend indicates that there was a global IT outage on Friday, which appears to have severely affected air travel as well as banking and healthcare services. Numerous flights have been cancelled and there were long queues at various airports as passengers had to be checked in manually. According to CrowdStrike, which is a cybersecurity firm, the problem was caused by a defect in a recent update to its antivirus software, which was designed to protect Microsoft's Windows operating system. Microsoft estimates that about 8.5 million computers across the globe were disabled during this outage. And over to the Eurozone, following its June rate cut, the European Central Bank met on Thursday and unanimously decided to leave its benchmark rate unchanged, whilst indicating that a September rate cut was still wide open. Given the ongoing concerns about inflation, this decision was widely expected by the markets and keeps the central bank's key interest rate at 3.75%. In a press statement, the ECB's governing council said the domestic price pressures as well as services inflation both remained elevated and consequently, headline inflation is likely to remain above the ECB's target rate well into next year. And crossing the channel to the United Kingdom, on Wednesday, the Office for National Statistics released data showing that inflation in the UK held steady at 2% in the month of June, which was in line with the Bank of England's target rate. This inflation reading came in above market expectations of 1.9%, but was at the same level as the inflation rate for the previous month of May. Meanwhile, core inflation, which excludes volatile food and energy prices, came in at 3.5%. In response to this data, the sterling pound rose slightly and was trading at 1.2977 versus the US dollar. And in the People's Republic, according to the National Bureau of Statistics, the Chinese economy grew by 4.7% in the second quarter of this year, but still fell short of market expectations for a growth of 5.1%. Industrial production for the first half of 2024 beat market expectations at 5.3% compared to an estimate of 5%. Meanwhile, high-tech manufacturing recorded an increase of 8.8%. Economists are now projecting China's GDP growth rate at 4.8%, which is higher than the previous estimate of 4.4%. And over to the United States, stocks declined across the board on Friday as Wall Street wrapped up a week that was defined by a rotation out of big tech stocks. According to market players, the stock market is experiencing a long overdue rotation, with investors taking money out of big tech stocks and reinvesting in certain small cap stocks that are viewed as the biggest beneficiaries of the anticipated rate cuts from the Federal Reserve. For the week, the S&P 500 slipped by 1.97% to close at 5,505, whilst the Nasdaq Composite snapped a 6-week winning streak as it dropped by 3.65% to end at 17,726. And in contrast, the Dow Jones Industrial Average advanced marginally by 0.72% and eventually came to a close at 40,287. And in the US bond market, Treasury yields ticked higher on Friday as investors considered the path ahead for interest rates. During the week, Federal Reserve officials indicated they were still waiting for more data to confirm if inflation was reducing sustainably towards the Fed's 2% target rate. The Fed chairman also said that rate cuts would begin before inflation drops down to the target rate. In response, the yield on the benchmark 10-year Treasury bond added around 5 basis points to 4.24%, whilst the yield on the policy-sensitive 2-year Treasury note rose more than 4 basis points to 4.51%. The Fed's preferred measure of inflation, which is the Personal Consumption Expenditures Price Index, is due out on Friday this coming week, and thereafter followed by the Fed's policy meeting on the 30th and 31st of July. Markets are widely expecting the Fed to keep rates unchanged this month, but traders are pricing in about a 98% chance for a September rate cut. For your information, bond yields and prices move in opposite directions, and 1 basis point is equivalent to 0.01%. In the commodity markets, the price of crude oil dropped by more than $2 per barrel on Friday as investors reacted to renewed hopes for a ceasefire in Gaza. On Friday, the U.S. Secretary of State Antony Blinken said that a ceasefire between Israel and Hamas was now within sight. The war in Gaza has disrupted oil supplies through the Suez Canal and in the process added a risk premium margin to the price of crude oil. In response, the price of the global benchmark Brent crude fell by about $2.48 to $82.63 a barrel, whilst the price of the U.S. benchmark West Texas Intermediate dropped by $2.69 to $80.13 per barrel. In the precious metals market, the price of gold slipped more than 2% on Friday as profit-taking kicked in following an all-time high, which was fueled by expectations of a U.S. rate cut in September. Markets are now pricing in about a 98% chance of a rate cut in September, and the prospect of lower interest rates tends to increase the demand for this non-yielding asset. The price of spot gold hit an all-time high of $2,483 on Wednesday before profit-taking saw the price drop by 1.9% on Friday before eventually coming to a close at $2,399 per ounce. In the cryptocurrency market, as the S&P 500 declined by more than 1.5%, the slump in Wall Street appears to have sparked a flow into digital assets. Crypto prices were higher across the board, with Bitcoin capping off a strong week as it broke above $65,000. For the week, Bitcoin was up by about 15%, and by Friday evening was inching closer to $66,000 per coin. And in related news, Ether, which is a cryptocurrency for the Ethereum network, received a boost earlier in the week amid reports that its spot ETF, that is Exchange Traded Fund, could start trading this coming week. And on that note, we now change scene to the Kenyan financial markets, and we start by looking at the domestic foreign exchange market, where during the past week, the shilling depreciated marginally versus the US dollar. And according to data obtained from the Central Bank of Kenya, the official exchange rate for the US dollar was quoted at 129.99 compared to 128.98 the previous week. However, in the interbank market, commercial banks were selling the US dollar within a range of between 132 to 134 shillings. The lowest rate was offered by Equity Bank at 132.25, whilst the highest rate was quoted by I&M Bank at 134.30. Meanwhile, the sterling pound was priced at 169.06 and the euro was valued at 142.15. And on the regional front, one Kenyan shilling was changing hands for 28.45 Ugandan shillings and 20.42 Tanzanian shillings, and to the Rwandese franc, it was posted at 10.08. The shilling now appears to be relatively stable against the US dollar. However, this may just be a short-term consolidation following the successful issuance of the latest Eurobond, which helped the country avoid a potential sovereign default. The fact of the matter is that Kenya's underlying economic fundamentals remain extremely weak, and this is evidenced by the country's excessive national debt, which now stands at above 70% of the gross domestic product and consumes about 60% of total tax revenues. And given these fundamentals, I expect that the shilling will continue to remain under pressure for the foreseeable future until such a time that we get our national debt under control. On foreign exchange reserves, Kenya's usable foreign exchange reserves decreased by $487 million to $7.4 billion, which is equivalent to 3.9 months of import cover. This level of reserves falls below the central bank's statutory requirement to endeavor to maintain at least 4 months of import cover. Kenya's foreign exchange reserves remain under intense pressure, partly due to the persistent current account deficit, where imports perpetually exceed exports, and this is further exacerbated by our ever-increasing national debt, which has pushed the country to the precipice of a sovereign debt default. On diaspora remittances, the inflow of remittances in the month of June 2024 totaled to $371 million. This is compared to $345 million in June 2023, which was an increase of 7.4%. Meanwhile, the cumulative inflows for the 12 months to June 2024 was recorded at $4.53 billion compared to $4.01 billion for a similar period in 2023, which was an increase of about 13%. Diaspora remittances constitute the largest source of foreign exchange and continues to support the country's current account as well as the domestic foreign exchange market. The United States remains the largest source of remittances into Kenya, accounting for about 54% of the total remittances that were received in the month of June. In the money markets, during the past week, the interbank market was sufficiently liquid and was supported through open market operations. The interbank rate, which is the rate that banks lend to each other on an overnight basis, was relatively stable at 13.14% compared to 13.09% the previous week. On the back of that, the average value that was traded in the interbank market increased to 33.2 billion shillings, and this was up from 29.6 billion shillings the previous week. Meanwhile, the excess reserves held by commercial banks in relation to the 4.25% cash reserve requirement, this stood at 41.1 billion shillings. And just for your information, the cash reserve is a statutory requirement that specifies the percentage of total deposits which commercial banks are required to hold with the central bank for liquidity management. In the government securities market, the weekly Treasury bill auction was held on Thursday, the 18th of July, and the central bank received bids totaling 20.9 billion shillings against an advertised amount of 24 billion shillings, representing a performance rate of 87%. The central bank ended up accepting 18.7 billion shillings, and the results of the auction were as follows. The 91-day rate ticked up by about 2 basis points to 16.02%, whilst the 182-day rate increased by 3 basis points to average out at 16.85%, and the 364-day rate was a shade higher by 1.7 basis points to settle at 16.89%. In the primary bond market, the auction for the July bond issue, which had 2 reopened Treasury bonds, was held on Wednesday, the 17th of July, and the central bank received bids totaling 14.6 billion shillings against an advertised amount of 30 billion shillings, representing a performance of about 49%. The results of the auction were as follows. The 10-year bond with 9.7 years left to maturity, the central bank accepted 6.7 billion shillings at a weighted average rate of 16.59% compared to the bond's coupon rate at 16% flat. For the 20-year bond with 3.9 years left to maturity, the central bank accepted 3 billion shillings at a weighted average rate of 18.29% compared to the bond's coupon rate at 13.75%. And shifting gears to the international markets, during the week, the yields on Kenya's Eurobonds recorded a mixed performance, with the yield on the 10-year 2018 Eurobond increasing the most by about 50 basis points as it rose from 9.7% recorded the previous week to 10.2%. Meanwhile, the 30-year 2016 Eurobond decreased by 10 basis points from 10.6% recorded the previous week to 10.5%. And at the Nairobi Securities Exchange, during the past week, the equities market recorded a mixed performance, with the NSE 20 gaining by 0.3%, whilst the NASI declined the most by 1.3%, as the NSE 25 and the NSE 10 both declined by 0.8%. This takes a year-to-date performance to gains of 23.7% for the NSE 10, 20.9% for the NSE 25, 18.1% for the NASI, and 12.8% for the NSE 20. The market's performance was driven by losses recorded by large-cap stocks such as Safaricom, Equity Bank, and Standard Chartered Bank, which declined by 3.8%, 1.6%, and 0.9% respectively. This performance was, however, supported by gains recorded by other large-cap stocks such as East African Breweries, British American Tobacco, and Stanbic Bank, which increased by 3.3%, 1.5%, and 0.9% respectively. During the week, the turnover in equities increased by 10.5% to about $9.7 million, as foreign investors remained net sellers with a net selling position of $900,000 for the week, but on a year-to-date basis have amassed a net buying position of about $6.1 million. Up next is our topical issue, and this week we are looking at Kenya's plans to issue a new Eurobond in 2026. Kenya is planning to return to the international capital markets with a fresh Eurobond in 2026. This comes ahead of the 8-year 2019 Eurobond for $900 million, which matures in May 2027. New disclosures by the Treasury indicate that there were two scheduled issuances between 2023 and 2027, and the first issuance was already floated in February this year. The new strategic plan for the 2023 to 2027 cycle shows that the National Treasury plans to enhance mobilization of funds from external sources through the issuance of sovereign bonds and private placements to investors. The new Eurobond will, however, be amortized, which means that both the principal and the interest will be repaid over the duration of the bond. This will help to mitigate the risk of a massive one-off payment at maturity, as was the case with the debut 2014 Eurobond. The Treasury has previously indicated its preference for cheaper sources of financing, such as the World Bank and the International Monetary Fund. However, following the rejection of the Finance Bill for 2024, funding from the World Bank and the IMF may not be quite as forthcoming. Kenya's credit rating was recently downgraded, which implies higher borrowing costs for the country. However, despite the foregoing, Kenya still plans to issue yet another Eurobond, which reveals the government's desperation and its continued over-reliance on the international capital markets to finance its maturing obligations. And on that note, we come to the end of this week's podcast. Thank you for listening to the Market Color podcast, and I hope that you found it to be useful and informative. And if so, please share it with a friend and help to spread the word around. I really do appreciate your assistance in this effort. And for your information, the Market Color podcast is hosted by Buzzsprout and is also available on all the major hosting directories, that is Apple Podcasts, Spotify, and Amazon Music. Please consider subscribing so that you can be notified every time I publish a new episode. And if you have any ideas or feedback on how we can improve this podcast, please feel free to reach me on the following email address. That is jamuhuri@gmail.com. Jamuhuri spelled Jamuhuri. Once again, thank you for your continued support, and I look forward to interacting with you again next week. And in the meantime, please do have yourselves a blessed and fantastic week ahead. And remember, if you are willing to strive, you can achieve any goal. That's a quote by Sadhguru. Think about it. Thank you, and God bless.